Welcome to the HMO Property Show. By investors, for investors. Catch us weekly as we discuss all things cash flow positive property investing. Whether you're a seasoned investor, a new landlord, or just curious about property investing, this is the podcast for you. Sponsored by the Co-Living Collective, your trusted partner in creating vibrant and sustainable shared living experiences. Visit us at colivingcollective.com.au to learn more.
13 lessons I have learned on my journey from Sparky in the northeast of England to running the HMO Property Co and delivering some pretty substantial numbers, if I do say so myself. At the weekend, I built out some dashboards so that we can put them on the screen in the office is the word I'm looking for. And so that it's a scoreboard so the team can see exactly where we are, exactly where we're heading and what's required from everybody as a collective so that we can smash our goal of 10,000 rooms in 10 years. So right now, as it stands, we have brought 882 rooms to the market. We've got 277 in the ground right now under construction, and we've got 442 rooms in our construction pipeline, which are moving to site over the next 3 to 6 months. Some of them might actually go in the next couple of weeks, to be fair. And we're not counting any of the NDIS stuff in there. There's a heap of that in the ground currently. When all of our HMO rooms are complete, as a company, we will have delivered 1,601 rooms to the market, which is a staggering number, to be fair. But we are nowhere near our 10,000 room target. And we said that when we were halfway, we would hit 3,500 rooms. For us to hit that, we need to get 16 sales per month by the back end of December 2026, and that should have us enough projects in the pipeline so that we'd have 3,500 rooms. And we believe as a team that is achievable. And why am I telling you this? I'm telling you this because along the journey, there's been lots and lots of lessons. And the person I used to be compared to the person I am now is totally different. And not in a bad way, not in a good way. I just am different. I've learned a lot. I've grown as a person. I've spent thousands on personal development. And I was thinking about what are the biggest things that I've learned on this journey. And I put 13 of them together for you in this little podcast so that hopefully you can get something from them. If one of them helps you, fantastic. If all 13 of them help you, even better. So number one is talk positively to yourself and back yourself. Now, I got this from Kerwin Ray, rest in peace, Kerwin. I also got this from my stepdad, Mitch. And my stepdad, Mitch, used to always say to me, if they can do it, son, you can do it. They know better than you. Make sure that you just put the hard work in and you can get whatever you want. So I've got old Mitchy Pops to thank for the kind of mindset that I've got and backing myself like I constantly do. But also when we did Nail It and Scale It with Kerwin Ray, he gave us what they called the commandments. And there was something like, I think there's about 18 or 20 commandments on this document saying like, I'm the master of business, I'm the master of sales, I'm the master of communication. I have a crystal clear mind and everything I see, smell and touch I recall with crystal clear accuracy. And I used to read that to myself every morning, and I've probably read that to myself every morning for like 2 or 3 years. And it definitely helps when you're talking to yourself positively instead of beating yourself up all the time. So don't let your inner voice, or don't listen to your inner voice, because it'll either fuel you, it will fill you with sabotage, like sabotage every decision you make, or it can fuel you positively and help you get to where you want to be, but you need to back yourself. And if you don't believe in yourself, then how is anyone else supposed to believe in you? Because self-belief is the starting point of every success story. So whatever your goal is, you need to believe that you can actually achieve it, which leads me nicely into set goals. And then set goals that actually scare you. I got this from my good friend, Mr. Calvin Coyles, and Mr. Ryan Tuckwood also backs us up as well by talking about bold goals. Now, the bold goal that we set, or the big, hairy, audacious goal that we set at the HMO Property Co, was to deliver 10,000 rooms to the market by 2031. When we actually set the goal, there was a zero missing off the end of it, and it was to deliver 1,000 rooms to the market by 2031. But we saw ourselves advancing towards that 1,000 pretty easy. And then Calvin challenged me and said, like, is that goal bold enough for a company? Is that going to excite people? Is that going to scare people? So we put an extra zero on the end and said, right, we're going to try and deliver 10,000 rooms to the market by 2031. And we've mapped this out in a way so that we know within 5 years, we need to deliver 3,500 rooms. Within 3 years, we need to deliver 1,500 rooms. And then between 5 years and 10 years, because we've got the foundation and the skill set and the team, years 5 to 10, we'll be able to deliver 75% or 70% of the actual rooms that we need, because the first few years we're going to be learning how to deliver and we're going to be refining our systems and processes. So big goals will give you a target worth chasing. Playing small is just as hard as playing big, but less rewarding, and your vision will dictate your strategy and pace. Now, every single goal you set needs to be a big goal. Just set one big goal. Ryan Tuckwood's is to own Leicester Football Club. Mine is to deliver 10,000 rooms when I'm talking to Calvin, but when I'm talking to Ryan, mine is to own Middlesbrough Football Club. So there you go. I'm putting it out there to the universe to see if it happens in the future. Number 3, proximity is power. Leaning nicely off, surrounding yourself with people like Calvin and Ryan and all the other incredible people I've got in my life right now, which I'm very, very grateful for. Not only having them people in your life, but networking with the people that are in the industry that you want to achieve your goals in. So whether that's property or cryptocurrency, however you want to build wealth, just surround yourself with the right people. Because if they're already where you want to be, they can pull you up to their level. And if you're just around people, it's just the power of being in proximity with people that are talking and doing and being and feeling the things that you want to do, then you will, without a shadow of a doubt, move forward towards where you want to be. I remember the first networking event I went to was super, super nervous. I had my little dodgy business card saying Neil Gibb, property investor. But all these things that I did in the early days, they've all worked and they've all became stepping stones for the next level, the next level, the next level. So the right people will push you further than you can push yourself, and they will pull you up to their level. Proximity accelerates learning and the opportunities when you find them, and your network is the shortcut to results. They'll say that your network is your net worth. And I did a podcast also called Your Self-Worth is Your Net Worth, because the more you learn and the more you back yourself, the more money that you can earn, whether that's in a business or a property portfolio. It all takes you being able to back yourself and believe that this is actually achievable. Number 4, this one will be no surprise to anybody, but education is great, but action is key. So education is only potential power, but action is actual power. Action on the education that you learn is where the power comes in. Knowledge can compound like money if you're taking action. Education reduces costly mistakes, especially if you're getting educated by a mentor and stand on the shoulders of giants, as they say. Why learn from your own mistakes when you can learn from somebody else's? And that way you can always stay ahead by always learning. And even now, I'm still constantly listening to podcasts, listening to books, reading books. I'm like a sponge. I'm always loving just learning new things. I made a commitment to just always be a student of life and not really pigeonhole into one thing that I want to learn. I just want to learn as much as I can, because I think the more you learn, the more you earn. And the more you learn, it's cool when you know things, right? I absolutely love it. And again, the person I used to be, the person I am now, I never used to read books. I never used to do anything like this. But what's got you there will not get you to where you want to be. So there's changes that need to be made for you to achieve what you want to achieve. You might already be on the path to where you want to be, and that's great. I would recommend proximity. Surround yourself by them people that are doing what you're doing and just drip feed off that information. And number 5, when you take an action, is protect before you build. I still see lots of property investors now going out and buying properties in their own name. And I get it. Some of them are negatively geared and they need to take advantage of the negatively geared tax benefits that are out there. But you're going to get tapped out. And you're leaving yourself open to all sorts of risks. Treat your investing like a business from day one. If you haven't started yet, please treat your investing like a business, because it is a business. You are talking now about $1 million properties because the property market is just gone crazy, and the buy-in now at the median house price in Perth, $780,000, around that sort of figure. So treat your property investing like a business. Set yourself up correctly with the correct structures that protect your assets, minimize risk, and also minimize tax if you've done correctly. And you've also got a solid foundation, which means fewer headaches later on. You don't need to change anything or move anything around. So if you are starting out now, don't worry, you can set yourself up and move in the right direction faster. Number 6 is time freedom is the ultimate goal. Money is just the tool. So if your goals are to just earn money, if your goal is money, Like, you'll get there and you'll feel empty. Money is the vehicle that provides you with the things that you need to do in your life. And if once you've got the cash flow coming in that's replaced your income, then you've got the time freedom from the job that you might not like. You might like it, or you might want to do another job that doesn't pay as good. So when you've got cash flow coming in to cover your lifestyle, then you can take a job on a lower wage, but one that actually lights you up and you enjoy doing, because some of you might not be enjoying where you work right now. If any of my team are listening to this, that doesn't apply to you guys. So yeah, define your real why for building wealth. Mine was to get off the oil and gas, get back onshore from working offshore, get out of the oil and gas industry and move into real estate full time, because I actually was passionate about property and actually just creating a career in real estate. And I always remember sitting down with Elizabeth Rutten back in 2015 when I joined I Love Real Estate, and she sat across the bench from me in my house in Hammond Park, which is a HMO now. And she said, what do you want to do? And I said, I want to replace my income with the cash flow from real estate, and I want to be a full-time property developer. And here we are now, 2014. So what's that? 11 years ago. And yeah, doing exactly that. Because this kind of business that we've got, this lifestyle that we have, it couldn't be achieved working full time for Woodside. Don't get me wrong, you can earn some good money with them guys, but it's not the kind of money that can give you the lifestyle that you deserve, with like 3 or 4 holidays a year, time with your family, taking your kids to school, all of these cool things that you can do when you don't have to worry about money. Because money without time is pointless, and cash flow replaces income and buys back your life. Number 7, cash flow is king. Say it all the time, guys. You can't use your equity to buy your groceries unless you draw down on that loan, but then all you're doing is using debt to buy your groceries, or debt to buy X, Y, and Z. Positive cash flow accelerates debt reduction if you use it correctly, or you can actually use that positive cash flow to replace your income and live life on your terms. And also, high yielding assets open the door to more deals. Why? Because the only way to increase your serviceability and access more lending from the banks is to reduce your debt levels or pay yourself more money. Now, every HMO that you invest in, if you are principal and interest, which the banks we're working with currently are forcing that onto our clients, which I don't think is a bad thing, because every month you're paying money off your mortgage, which means your debt levels are decreasing. And one of the ways to access more lending from the banks is reduce your debt levels. And also, every time your debt decreases, it means your holding costs are less, which means your cash flow increases. And the 2 ways to access more lending from the banks are to increase your income and decrease your debt levels. The HMO does that on autopilot for you. Number 8, I love this one. You cannot save your way to wealth. You say it all the time, guys. Money in the bank is just getting eaten up from inflation constantly. And saving alone, you're just never going to beat inflation and compounding returns. Leverage and assets grow wealth faster than bank accounts ever will. And if you start investing early, even if it's small, even if you can only afford a 2x1 in whoop whoop, as long as it's got good fundamentals for the property to increase in value, then get your foot in the door with something. Just invest in something, just so that you can let the market do its thing, let leverage do its thing. But whatever you do, do not leave your money in the bank and save your way to wealth, because that is the dumbest idea ever. The old rules of paying down the principal place of residence and putting your money into superannuation and retiring, it just doesn't work anymore, guys. It doesn't work. You cannot save your way to wealth, and all that money tied up in your principal place of residence, it's not doing anything for you, is it? So you might as well use it, invest, grow your wealth. Number 9, buy, hold and pray is the long way. So again, when we see all of these people that are just buying negatively geared assets waiting for capital growth, so many people get stuck, and so many people will get stuck. Not only they get stuck because the market could stop, but they get stuck because the bank stops lending them money. So it's definitely not the way to go. And without cash flow, you can't move forward, and active investing beats passive hoping. Now, leads me nicely into my next one, which is hustle, hustle, hustle. Do not wait for the market to go. Do manufactured growth strategies to build your wealth faster. And manufactured growth strategies are where you force value onto a property by improving its value through a renovation, a subdivision, a strata title, whatever it is that can improve the value of that property. You need to do these to build your wealth faster. So if you can't save your way to wealth, right? Use that money into manufactured growth strategy. I've actually got 14 things for you, by the way. I've said 30 now, but it's 14. Use your money into manufactured growth strategies And then you can create value rather than waiting for it. Renovation, subdivisions, HMOs, all these things, manufactured growth strategies compound your progress. Now, if you can layer multiple manufactured growth strategies into one deal, then you will see a much better ROI on the back end. So if you can pick up a property that is let's say a 1:2 subdivision, you can keep the front house and you can renovate it, and then you can subdivide on the back and build on the back, then you're layering 3 strategies into that same deal instead of just doing a renovation. Now, it might take you a little bit longer because you're running a subdivision and a construction on the back. However, because you've only had one buy-in price and potentially one sale price if you sell, but if you're holding and refinancing, then you can just refinance and you haven't had them sales cost. But you haven't had to do 3 separate deals to get that uplift. You've done one deal and laid the 3 strategies in there. But Neil, I hear you say, I don't have enough money. Well, number 11 is B, do not blame the lack of resources. B, resourceful. And what I mean by that is if you've got no money right now and you've got no serviceability right now, I'm going to take you back to education. Learn how to do deals using OPM and OPP. Other people's money and other people's property. You can do joint ventures with property owners to help improve the value of their properties. You can also find joint venture partners that can invest capital into deals and you become the working partner. They become the money partner. You can split the profit. You can give them a return on their investment, however you want to do it. But whatever you do not say that you cannot do deals and you don't have money to do deals and you can't find a deal. There is deals everywhere and there is money everywhere. And all you need to do is put the pieces together and then you can then be resourceful instead of blaming the lack of resources. Now, don't get me wrong. This can be quite difficult. It's definitely not something that you can just go out there and do straight away, but it can be done. I've done it many, many times and still do it now to these days. We still, depending on where cash flow is in my portfolio and the business, sometimes we might bring investors into a project every now and again and just give them a return on their investment. And the reason that I'm in a position to do that is because in the early days, I got uncomfortable, which leads me nicely into number 12, get comfortable with being uncomfortable. Because procrastination is going to feel uncomfortable every single time. And you're going to have to learn to step into this uncomfortable zone to speak to joint venture partners, to ask them ask them for money, but ask them to invest in a project with you. You're going to have to get uncomfortable knocking on somebody's door and asking them if they want to sell that property. You're going to have to get uncomfortable when you're speaking direct to a vendor and saying, I've got this idea and this is what it looks like and you're going to make some money and I'm going to make some money. And then the lawyers are going to put a joint venture document together and we're going to sign it and then we're going to go out and we're going to do this. This all feels very uncomfortable the first time you do it, but the more you do it, it becomes a little bit more comfortable and a little bit more comfortable. As I say, you sharpen your sword with every single deal that you do. But procrastination will definitely creep in. I still feel procrastination every now and again when I need to do something that I really don't want to do. And the urge to just go check the fridge or the urge to just crush them cardboard boxes down in the garage will take over. But I'll do it and I'll be down there and I'll be thinking, why am I crushing these boxes? I'm just procrastinating, and I'll go back and I'll actually do the thing that I want to do. Don't get me wrong, my procrastination now is nowhere near what it used to be back in the days, but I still used to get shit done, right? So discomfort is where the growth happens. The more you push your limits, the bigger your wins. And fear is a sign that you're on the right track. So if you're feeling that fear, step into it. I think it's Brené Brown. She says, feel the fear and do it anyway. And number 13, which I thought was the last one, but it isn't, I lied. Partnerships multiply possibilities. Now, there's a saying, the people at the bottom are competing and the people at the top are partnering. I think that's a saying. I probably just butchered it there. People at the bottom are competing and the people at the top are collaborating. That's the one. People at the bottom are competing and the people at the top are collaborating. Now, my business and my portfolio, everything I've done has expanded and gone faster the more people that I partner with, whether that's joint venture partners, whether that's my business partners across the 6 businesses that we have now. Business partners in all of them, joint venture partners. God, there's so, partnerships are just the secret weapon, and so many people just go, I want to do it myself, but 50% of something is better than 100% of nothing. So why not partner with somebody that's got a different skill set from you or bring something different from the table from you so that you can both work together to get the outcome? Because collaborations fill your skill or capital gaps, and the right partner can half the time to your goal. Joint ventures, as we've said, share both risk and reward. So do not be afraid of partnerships. I think they're a very, very cool tool. Number 14, do not be in this for the short term. The long game will always win. What I mean by that is ignore the short-term noise and focus on the fundamentals, because compounding works better over decades, and patience and consistency are your real superpowers. Consistency is definitely a superpower there as well. And also like the will to never give up, because hard work, consistency and persistence will outstrip talent any day of the week and twice on a Sunday. Because you can be talented but not be putting the hard work in, and then you've got someone that's just grafting away. And I can really only relate this to football. Well, I can't only relate to football, but football, right? There's some really, really talented soccer players out there, and then there's some other just players that probably don't have the skills that these people do, but they just have the hard work and the tenacity and the drive and the resilience just to go out there every single day and give 100%. And these people are on the winning teams. And then you see really talented people that don't want to put the hard work in, and they're not winning trophies like the hard workers are. Manchester United were one of the most successful team of the 90s and the early 2000s. And they had a talented team, but they also had a really, really hard working team. And their thing was every time they lost the ball, they worked hard to get it back. So they had a combination of hard working talent in that team. The long game wins. Patience and consistency are your real superpowers. So there you have it, guys. My 14 lessons I've learned along the journey. Number 1, talk positively to yourself and back yourself. Number 2, set goals or bold goals that scare you. Number 3, proximity is power. Number 4, education pays dividends forever, but action is key. Number 5, protect before you build. Treat your investing like a business. Number 6, time freedom is the goal, money is the tool. Number 7, cash flow is king. Number 8, you can't save your way to wealth. Number 9, buy, hold and pray is the long way. Number 10, hustle through manufactured growth strategies. Number 11, be resourceful. Do not blame the lack of resources. Said that the wrong way. Do not blame the lack of resources. Be resourceful. Number 12, get uncomfortable. I've said that backwards as well. Number 12, get comfortable with being uncomfortable, and procrastination sucks. Number 13, partnerships multiply possibilities. And number 14, the long game always wins. So there you go, guys. I hope you have enjoyed that episode of the HMO Property Show, and I'll see you next week. And remember, every master was once a disaster. Every winner was once a beginner.
Thanks for watching. Make sure you tune in the same time next week so you can stay up to date with all cash flow positive property updates.